Morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the SEC settlement markets. Absolutely booming. $4.5 billion, the latest settlement. We're going to get into all of that and more in just a little bit. But before we get there, I'm your host, Bicho. I'm joined by my legendary co-hosts, Legendary and Sammy. And just before we get into everything, just a reminder that nothing that we say here is financial advice. This modern market is super risky, so please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 13th of June. How are you doing? How are you feeling?
GM, doing quite well. Looking forward to our modern market meetup this very evening.
Yes.
And excited. I think we have three pretty spicy topics for today. So very excited for this show. Think it's gonna be a bit controversial today.
Yeah, looking forward to the controversy. Also, maybe a sprinkling of misinformation, fake news. We don't know how far we've gone down the Reddit rabbit hole, but I think Sammy has some very incriminating imagery to show us potentially. Remember, we're live on X in the space, but we're also live streaming on YouTube and X as well, if you prefer to watch in. Sammy, how are you doing? It's Thursday, drawing towards the end of the week. Timeline still chopping itself up, I think, a little bit. How are you feeling?
Yeah, good. I think the topic that we'll be talking about shortly, I think it puts a new definition on shitcoins. So, and you'll see why in a second. But looking forward to the modern market meetup, having a few beers in person, catching up. It's always nice to have Legendary in our home city. Looking forward to it. Getting stuck into these controversial topics.
Yeah, let's do it. Right, let's just get into it straight away then. Sounds like a lot of fun and games. We will get into it from the snapshot. As always, it is pinned up top. We're going to get into the price action and the headlines from there. If you do find it brings you some value today, please do give it a like. Starting with the price action. As much as everyone feels pretty emotional at the moment, everything's flat. Bitcoin, 67.6K, ETH at 3.5K, Solana at $152. Number one, Terraform Labs, Kwon to pay a $4.5 billion fine in a settlement agreement with the SEC. A bit more context here. Terraform Labs and former CEO Do Kwon have agreed to pay the SEC $4.5 billion in disgorgement, pre-judgment interest, and civil penalties. The settlement still needs to be approved by a New York judge, so it's not 100% over the line yet. The agreement would also permanently ban Do Kwon and Terraform Labs from buying and selling crypto asset securities in the future. More context to come after. The main question coming from David Hoffman from Bankless, and it's something that came to my mind as well. Where's this 4.5 billion coming from? where is that money coming from? There were a lot of people who got wrecked using Terra, so not entirely sure. There was no explanation in any of the docs I read. Looking to get into that discussion in just a little bit. Number two, Curve Finance founder faces liquidation risk of $141 million worth of Curve after taking a $95.7 million stablecoin loan against it. This has happened before, where he's kind of neared liquidation for the loan that he's taken out against his Curve position. Seems like it's in danger again. And finally, Blast Gold announces final gold distribution with pre-market trading live at around $4. I've written $3 in the snapshot. That should probably be corrected to around $4. I think that's where the action is taking place at the moment, maybe a touch higher than that. We're going to debate that to see where we think that's going to be coming out. A few competing ideas on the timeline, so we'll get into those in just a little bit. Into some NFT price action, we've got CryptoPunks slipping further down a couple of percent to 28 ETH. We've got Bored Apes down almost 9% to 10.5 ETH. Saw nothing about that on the timeline, so happy to bring that to your attention, not happy to report it. Mutants down a couple of percent to 1.8. DGods still now at 1 ETH. Captains at 3.3. Azuki's at 3.7, down a few percent. Penguins bucking the trend, up 2% to 10.9, almost at 11 now. Mad Lads at 66 Solana, and the Nouns winning bid was at 5.3 ETH. Legendary, that is the price action. Those are the headlines. What is catching your attention before we get into all of those controversial topics?
Absolutely. If we take a look at the Mintify heat map on the ETH side of things, yesterday was a pretty flat day. Today is a bit more interesting. On the gaming side, we have both Pirate Nation and Pixelmon down quite a fair bit. Pirate Nation down to 0.74 ETH floor. That's down 30%. Pixelmon down 20% to 0.4 ETH floor. Now with Pirate Nation, obviously we have the incoming airdrop. So there's definitely a lot of trading going on around that, and B, also snapshots to keep in mind. So I wouldn't pay too much attention to those dumps before the TGE. On the greener side of things, we have Milady's pumping. They are up 7% and now back at a 4.6 ETH floor. And as you said, the rest of the market is pretty red. It's rather red. Bored Apes definitely leading that dump a bit and are being followed by quite a few other collections.
It's funny, as we've said before, Milady's and Remilio's literally just counter the market every single time. Like if everything else is down aggressively, they'll be up aggressively. And if everything else is up, they tend to just to go down on those days. Very interesting stuff. Thanks for that. Sammy, what about you from your side? I've got a few thoughts on the market there, but what's catching your attention?
Yeah, so a few things, probably more on the Blast side at the moment, but just on the ETH side, there's so Rect guys, just to let you know, I mean, they pumped a little bit, so they saw a sell-off recently. But just a reminder, they've got the equity claim. So for those that held a Rect guy back in October last year, you can claim that, but there's a limited window for that. So if you did have one, you should definitely check and make sure that you've claimed that equity, because it's basically free.
Damn, I'm just looking at them though on Mintify. It's down to 0.17 Rect guys. Down quite a lot from where they were. I know they were kind of ranging between 0.4 and 0.5 for like a very long time. That seemed to be like a comfortable place for them. I don't know if they sold off significantly after the equity stuff, which I genuinely thought was really, really cool by Ovi, like legit trying to push the space forward and yeah, making a real attempt to bring other people along for the Rect journey. Interesting to see that, because it hasn't been on my radar for a little bit. You wanted to say something about the Blast side of things, Sammy. I'm bringing them up on. Well, I'm bringing the Blast Mintify heat map up now.
Yeah, so just looking at the main green one, so Wolf Game up 6%. They received, I think, a 500k gold allocation. So obviously people still competing to try and accumulate that. I think I've done, and it's actually a lot easier on the Genesis side to get those points. So if you are genuinely considering accumulating Blast Gold, it's not a bad play, especially given that the actual Wolves are now significantly cheaper than what I paid for them. And Wolves down as well. So it's pretty cheap to play, and you can accumulate for a reasonable price. I think there's 7,500 gold per Deep Cave, which is the Genesis Cave, versus 3,500 per Blast Sheep. So it's quite a significant difference, and there's less people doing it. So there's a bit of upside there. And the other one is the Wolves. So this is Adam's project, who's big into the Blast ecosystem. His project has received a slightly bigger gold allocation as well. So I think it went from 2 to 10k because they managed to launch a game, I think it is.
That's pretty cool.
Time. So it's just something to note there. But he provides some pretty good updates on a daily basis as to what's going on in the Blast ecosystem. So definitely worth a follow.
Yeah, very cool. I definitely agree. I think his handle is Adam GB. Does like a Blast specific update every single day. Very, very useful. I read it every single day too. Interesting to see though, as you just said, this particular collection, I'm showing it for the people watching on screen, up to 0.07. So up about 12% in the 24 hours, up 30% on the week, purely on the back of an increased gold allocation, right? So someone has done the math somewhere to be like, okay, this is how much gold this collection is going to get allocated. This is how many pieces there are in this collection. We're happy to move the floor up to this particular price. So I'm still concerned broadly about the Blast coin and NFT market, actually, because of the way some of the collections trade aggressively in line with the gold allocations. But I think we're going to dive into more of that Blast strategy a little bit later, because I think we're all pursuing kind of different strategies at the moment, but we definitely want to dive into that. The Blast final distribution for gold has been announced overnight, and we're going to get into a conversation towards the end of the show on that, where we really outline our very different strategies, actually. And I'm unsurprisingly going to be the most lazy of people. So if you're kind of bored and don't want to farm blast, but kind of want to farm blast at the same time, maybe my strategy might be the best one. We'll discuss that in a bit more detail in a bit. Legendary, any final reflections here on the price action before we get into headlines and stuff?
Nothing to add. Let's get into the spicy stuff.
Okay, let's do it. So the first headline today is this Terraform Labs, this Terra news, which was reported, well, by everyone on the timeline. Terraform Labs to pay SEC $4.5 billion to wind down and burn the assets. For people who don't remember, Terra Luna was I can't remember how you describe it, Legendary. Is it the algorithmic stablecoin or the crypto-backed stablecoin? What's the precise terminology for it?
I would go with algorithmic stablecoin for sure.
Yeah, so it was like a basket of goods, a basket of crypto that was basically backing it as a dollar stablecoin, and it completely collapsed in the last cycle, went completely to zero, I believe. And all kinds of accusations about them selling stuff when they shouldn't have been selling. Loads and loads of people got completely wrecked in that ecosystem. Kwon, the founder, has been arrested. I think it was in Montenegro. He was arrested first. Clearly very much under investigation by various authorities, I think it's fair to say. And so it transpires today, or yesterday, it was announced that they have paid the SEC a $4.5 billion settlement. So I'm just going to give you some of the details before we consider any of the further implications. So Terraform Labs, they've agreed on the $4.5 billion settlement. They will be required to pay $3.58 billion in disgorgement, $466 million in prejudgment interest, and $420 million civil penalty. Meanwhile, Kwon would be liable for $110 million in disgorgement, $14.3 million in prejudgment interest, and $80 million civil penalty. So I think that means he's personally liable for those amounts. One of the wallets associated with TFL holds $74.5 million worth of assets, according to data from Arkham. But the whereabouts of the entity's other asset holdings and whether the value of those holdings will be enough to pay the multi-billion-dollar sum to the SEC remains in question. Still, the securities regulator has claimed that the proposed fine amount is a conservative measure of TFL and Kwon's unlawful gains. Lawyers for the SEC stood by those estimates in the letter to the judge, noting that the defendants still control hundreds of millions of dollars from the TFL ecosystem and hold some of these assets through the Loon Foundation Guard. As part of the proposed settlement, TFL has agreed to wind down its business within 30 days of the entry judgment. The only disposition of defendants' crypto assets that the judgment permits is of those transferred to the Terraform bankruptcy estate pursuant to the terms of the judgment. Final, maybe interesting bits. The judgment requires the defendants to burn or destroy private keys in Terraform's possession to wallets or blockchain assets holding UST, Luna, or any of the other Luna assets. And the CEO of TFL actually confirmed in a Twitter thread that they'll be dissolving operations and that they want the community to take over. Now that they've burnt this stuff to the ground, they just want the community to kind of come in and fix it. So a couple of interesting, very, very interesting in general. One instinctive thought from me, and then I want to throw to you for your thoughts, Legendary, and Sammy, want to bring you in on this as well. I wouldn't have thought, and remember, I was like, when I say I was a lawyer, it's like, yes, I was a lawyer. I worked as a commercial litigator actually for a couple of years at a big city firm in London. I was never serious enough to know anything. Certainly, I would basically just work for the more senior people and Google stuff when they needed me to. But it sounds strange to me that you can agree a settlement for a certain fee if you don't have the money. And typically, when I'm not sure about something when it comes to the law, I just try to ask myself, what is the thing that makes most sense in this particular scenario? And if it doesn't make any sense, then I try to err on the side of what stuff makes sense. So I have to think, based on the information available or that we've gone through, that they do have the money, although, as this article suggests, the whereabouts of the rest of the money is unknown, according to what's been made public at this moment in time. Legendary, I'll just go to you there. General reflections on this episode, on the scale of the fine and the whereabouts of the money.
Yeah, maybe one quick step back from that. In
Yes, please.
terms of the stablecoin and how it worked is you had that two token system, you had UST, you had Luna, and the stablecoin was backed by the volatile asset, by Luna, and the issue basically stemmed from the fact that if Luna goes down and is suddenly not enough and not strong enough to back the stablecoin, so if one of them crashes, it's pretty likely that the other one will crash, respectively depeg. And as a countermeasure to that, there was exactly that that Luna Foundation guard, which was basically a massive, massive stack of assets that Terra has been building and buying up over time. And if you go back to May 7th, 2022, back then the Luna Foundation guard held a reserve consisting of 80,000 BTC at today's price, way more than 5 billion US dollars, 40,000 BNB, 26 mil in, or 60 mil in 50 mil in USDT and USDC, and a bunch of AVAX and some other currencies. But just the BTC portion alone at today's prices would be more than sufficient to pay the fine. However, what that foundation guard was used for basically is to sell assets and to try to stabilize and repeg the price. And to the best of my knowledge, it is still unclear how all of these funds have been used or where they have been used. And this would be my assumption that because if you currently look at the official Terraform Labs wallet, you see there's 75 mil on there. So that's obviously not enough to pay that 4.5 billion fine in total. But my assumption would be that exactly from that foundation guard, some funds have been moved around, and there's definitely more, but not definitely, that's my assumption. There's probably more there than those 75 mil we can see in that official Terraform Labs wallet.
Nice. So I'm sharing the tweet and the images of the wallet which you just described. As you said, $75 million in there, with around just over 1,000 Bitcoin and then a whole bunch of other assets. Thanks very much for kind of going into taking a step back and explaining some of the context. I think that was helpful. So as you say, a lot missing at the moment, and unclear to where that might be coming from. Sammy, what's your thoughts on this? We'd love to throw to Brett in a second as well. I know he enjoys being a bit of an on-chain sleuth. Wonder what his thoughts are here. But Sammy first, what are your thoughts on this?
Well, as an ex-auditor, I'd be very concerned if that amount of money has just gone disappearing. So there must be some sort of trail of breadcrumbs, especially if it's on-chain. And I don't know if that's just gone through centralized exchanges and it's become obfuscated. So I don't know without looking on chain and seeing that. But yeah, that does concern me. I don't know if we're going to touch on I think some of the other comments from Trustless State and so David Hoffman and some other people. But I do have some points on that. So I don't know if you wanted to set that up first and I can come in on that.
Yeah, let's do it. So as you said, I think one of the main comments seen on Twitter, although there were many commenting on this, was one of the more prominent voices, David Hoffman from Bankless, said if Terraform Labs actually has $4.5 billion in assets, and if it actually is paid as a fine to the SEC instead of the users who lost money, it'll be one of the craziest examples of agency corruption in our lifetimes. And just going through some of the comments, some people replied saying, exactly my thoughts. I lost money in UST. So what do I get if Terraform Labs pays to the SEC? The money should go to the victims and not the government.
Yeah, so just on that. Now, I'm not a lawyer, so you probably understand the terminology better. But my understanding of disgorgement is it's not a penalty; it's a remedial action. So I think that we saw, was it 3.6 billion of that total fine is going to be disgorgement, which suggests that that's actually going to be paid back to the victims. So that is quite a significant portion that should be going back to them if they are able to actually pay it. So even though, I just think there needs to be clarity around that.
As I always say, when I was a junior lawyer, if I don't know anything, I just Google it. That's what all the lawyers are doing, and that's what you're paying for. Disgorgement is a remedy. Yeah, actually, you should just chat. That I guarantee you, when you're paying lawyers a hell of a lot of money, that's what they're doing. Disgorgement is a remedy requiring a party who profits from illegal or wrongful acts to give up any profits they made as a result of that illegal or wrongful conduct. The purpose of this remedy is to prevent unjust enrichment and make illegal conduct unprofitable. District courts have wide discretion over whether they will mandate disgorgement in a given case, as well as how much money must be disgorged. Okay, that doesn't explicitly say means you've got to give it up. But as you said, it doesn't necessarily mean where that gets diverted to.
Yeah,
I think
there's an SEC page on disgorgement because we had the discussion,
Nice.
and it is exactly what you say. The Commission seeks disgorgement to ensure that security law violators do not profit from their illegal activity. The disgorged funds are returned to the injured investors. It's exactly that. And yeah, it kind of shows that people just see fine and don't go on about reading 2 or 3 more lines or like look up a word they don't understand.
Okay, so that's interesting. Nice little bit of live investigation as usual. So just again, to go back to the article, if we're going to apply some logic here and analysis from what you've just said from the SEC site, if the obviously the total fine is $4.5 billion, but that means the disgorgement portion
It's
is
$3.6 billion.
3.6 bill. Okay. So it could be a scenario here where people, I highly doubt anyone gets made whole, but people might see some funds back. Although I suspect the process of redistribution could be significantly more challenging in the decentralized environment of Luna. Although you'll know, Legendary, I wasn't actually involved, so you'll know to what extent people KYC'd and whatever, versus FTX, where obviously all that stuff went down, but the people who are working through the bankruptcy lawyers have everyone's details of who had what funds where, because everyone had to KYC. Was there a process for Luna and anything
I'm
like
also
that?
just on that. I'm also curious, like, because some people would have taken out insurance, and I think you've mentioned openly that you've done that, Legendary. So, in the instance where you can be made whole, does the insurer then receive those funds, or do you get a portion of that was the shortfall, and then?
I actually have no idea on that. It's something I want to look into because I had insurance. My insurance paid for that. And I have no idea what would happen if some of the funds would be returned. And in terms of how they would be returned, probably, again, that's me speculating again, but the most feasible way is to have a specific snapshot, similar to the snapshot that they did when they issued the new currency that they had after Luna, which I also can't recall its name right now. And just to look at that snapshot and based on that, try to make people whole / somewhat whole.
Okay.
And would they give a shit about non-US citizens? That's another question. Like, does SEC care to give to non-US citizens?
Yeah, and that's the reasonable question, right? That's why I was asking about KYC. To what extent will they know who exactly is participating and who exactly the people are who they need to pay back?
Maybe this will be the process then, that you have to KYC if you want to make a claim in that settlement, and then you have to, well, have proof of your wallets, KYC them, and then probably if it were only to be returned to US investors, which would make sense, then to also have proof that you are a US citizen. But again, I don't know, like, it's something I'm speculating on how that process could work if those funds were to be paid.
Yeah, nice little bit of speculation there. Definitely interesting to me. When I see words like the SEC maintains that Terraform Labs is still in control of hundreds of millions of dollars from the Terra ecosystem, yeah, you have to think that they've seen something which makes them makes them think that this claim is worthwhile, because ultimately there's no point making a judgment for anything if you do not believe that the value that the judgment is for is not going to be repaid on some level. Sammy, and we have to be clear on this particular point. I asked you at the beginning of the show, perhaps this was some misinformation, perhaps it was fake news, but I had seen something written that Kwon had concealed a ledger inside of himself, and it was located via a located via I don't know what, some type of X-ray or something.
His rectum? No.
Yeah. Do you have any X-ray imagery to confirm or deny that?
Only through non-reliable sources, just through like Reddit and things like that. I couldn't really find a formal source, so I don't know whether he does have his shit coins on there. But yeah, it's an interesting one.
Okay. Well, $75 million in the public wallet, 300 and something, or a few billion in the ledger inside of him. Who knows? No, we definitely 100% do not know that. So a little bit of speculation again. But interesting to see that. And we'll be obviously following that to see how that plays out, because I think a lot of people were injured to some extent from those losses. So we'll keep an eye on that. Let's keep it moving though, unless there's anything else to say there. As we mentioned, the Curve founder, we've got this Curve news where the Curve founder has almost got liquidated again. This is pretty, I don't know, it seems pretty significant, although it kind of passed without any big stress last time. Legendary, do you want to just set this up and explain what's going on with Curve at the moment?
Yeah, absolutely. The timing is impeccable of that, since we touched on exactly the Curve situation yesterday.
Yeah.
And it's a very, very similar situation to the one we've seen before. We have the Curve founder, Michael Ergorov, who has significant on-chain loan positions against the Curve token, which he owns quite a fair bit of. And he has currently 111.87 million CRV, which is roughly $34 million in collateral, and 20 million in debt on 4 platforms. Those are Uvuland, Rexland, Inverse, and Curve's very own Llamaland. And I think that around 3 a.m. is Eastern time on Thursday, there's been a couple of liquidations for both USDT and DAI on Uvuland worth over 5 million. That brought his health rate up back to 1.08 on the one hand. On the other hand, I think, Sammy, you had also a look into his wallet, and that he now started to pay back on his loan again. But I think also another point of concern was that his annualized interest rate would be well over $60 million US.
One follow-up question here, Legendary. As you said, this is not the first time this has happened, where I guess the price of the token is in complete jeopardy because of these loans that he's taken out against it. In this article, it says in August 2023, which is must be when it last happened, Ergorov sold 106 million Curve for $46 million in deals to reduce potential liquidation risks associated with his outstanding debt across DeFi platforms, including Aave. Is this when other people kind of stepped in, bought it at a discount just to make it a little bit safer for everyone else?
Yeah, exactly. Those were volumes that weren't dumped on the open market. There were OTC deals. Was a big discussion on the timeline as well, with some people stepping up, some discussing that in private. So that you obviously don't go on the market, dump the Curve token, then by doing that, dump the Curve price significantly, and also completely worsen the situation of your own loans by making your collateral less and less valuable by dumping on the open market.
Imagine that this is the way it sounds. I mean, the reason why we were talking about Curve yesterday was because we were talking about how founders are supposed to have a reasonable exit from a company. And ultimately, in the current model, if you're incentivized to take so many tokens as part of your compensation package, this is one of the things available to you, right? You can, if your token trades at a particular price and someone is willing to give you a loan against your token, against your tokens, some people might take it. It's just if that price of the token then decreases so significantly, the whole protocol or the whole token or the whole ecosystem becomes under pressure, and kind of jeopardizes the whole thing because of that very significant loan. And in this case, it was a colossal one. So any reflections here, Sammy, on like how people are supposed to, like, do you think this model for founders is going to be gone? Like, do you think there will have to be more natural ways of selling the token, or maybe going OTC only and it'll be very frowned upon? Or do you think it's a reasonable move? We'd love to hear NFT Stats' take on this as well, like whether these kind of loans against tokens will be an appropriate method in the future.
Yeah, I mean, it's difficult. I mean, there's the OTC deals that happened last time. I think from memory, I think it was Matchy and Justin Sun stepped in, bought it at a significant discount. And it's difficult to, like, how do you align interests of the founder long term if you don't offer them tokens or a vested interest within the company? And I think maybe it comes down to the tokenomics and vesting schedules and the expectation that actually once they vest, they then are able to sell, and there's no like sell shaming or anything like that, because ultimately they need to put food on the table. But yeah, it's
or a few Australian mansions in the
exactly.
That's what this was sold for.
Exactly. Yeah, so needs must. And I think yeah, it comes down to incentives, alignment. Like how do you do that? And maybe we're still experimenting with that and trying to find that optimal solution. But yeah, it seems like this is a recurring theme, and I don't see how this is going to be fully resolved unless he does some more OTC deals, because it's a pretty sizable sum of money. I think it was 168 mil or something like that last time. And if we're looking at sort of similar numbers again, like yeah, without more liquidations, I don't know who's going to step in. But yeah, it could be systemic. It could be a nothing burger. It's very hard to tell without doing some more investigation.
Yeah. Okay. I think that's a fair take. Would love to go to NFT stats here. Welcome to the show. Sam, good to have you back with us. Hope your travels are going well. What are your thoughts here on founders taking loans out against their own tokens?
Yeah, I mean, look, clearly it's just like a different way of getting some form of exit liquidity. Like, I mean, it's a way of monetizing your project, probably a little bit more in a bit more of an under the radar sort of way. Like, that's what it strikes me as. I mean, you could probably argue that, you know, people want to hold their token for a long time and are just taking some liquidity and are going to pay it back or whatever. But broadly speaking, to me, it seems just like a way to sell your token without, or to at least get liquidity on it without raising as many alarms. Like I still, like, Poopy took out a ton of loans against his doodles. I think he always paid them back, but he had kind of a similar situation back then that I remember. Like, my broad view on these markets is just the more loans you get against something, just clearly the more volatile the down moves end up being, because of all the unwinds that happen on the way down. Like, we've seen that many times over. So you know, whatever, it puts your holders at a bit more risk. The minute I said exit liquidity, T-Row raised his hand. So he seems like he has a stronger opinion on this than I do, though. So I pass it over to him.
Appreciate it, man. Thanks for your thoughts. As always, T-Row, are you happy with being the exit liquidity in this situation? What are your thoughts here, my friend?
No, I don't want to be slapped in the bottom for being a loyal holder on TGE. Like, that's usually when the coin hits its highest number and, you know, it fights to get back to there. Look at what ApeCoin did. And crazy, so how crazy it went.
Yeah. So what do you think then about founders taking loans against their assets in this way?
They need to be very, very transparent and in letting their holder group know this. Like, are we going to grow up and as a modern market be able to disclose these things and act like adults, or do we want to creep in, you know, ambiguity and be able to sell off and dump on your loyal investors and community that you've been building for however long period of time?
Yeah, it's a fair take. I think that's definitely that is a perspective that could be out there. It's interesting that on the one hand, some people might think, well, you need to try to be. Some people might think, well, it is transparent, but equally, Sam was saying there's something about it which is a bit more covert because you're not actually selling the asset, so it feels a little bit more covert. And yet, it's all on chain, and I guess people knew that this stuff was happening at the same time. Legendary.
Everything's on chain, right? The question is just who's paying attention. Yeah. You know, people always say, like, go check, it's on chain. 99.9% of the people who are in this space don't know how to check stuff on chain and just kind of have certain alerts for certain things. So it's a way that you can do it. That said, like, maybe you don't, and maybe you're someone who doesn't have a lot of liquidity and launched a token and wants to stay in it, doesn't want to sell, like, and it just says, okay, I'll take a loan out against it so I get some liquidity. Like, you know, who are we to judge? But people always say it's on chain, you can check. Well, there are different kinds of on chain. And when people say, like, oh, just check the chain, I know because I do a fair bit of data analysis of stuff that's on chain and fairly accessible, and that's entirely new to my entire follower base that all follows the chain, right? Like, most people don't actually keep up with everything. And if you can do things that are a little bit less in the spotlight, like, you know, there's certainly value there. That said, you know, there are all sorts of different reasons people can do this type of stuff. But yeah, it does create this downside volatility if things start to crash, because the real question is, are these founders going to, like, pay back the loans when they're underwater?
That's the part that I was maybe leaning towards, maybe trying to wrap this topic up, trying to figure out, like, what feels right the most. Obviously, there's nothing wrong in principle with two people agreeing a deal, and it's one person's assets and they've agreed a deal, right? But it feels like a loan is usually made with the intention of paying back. At least in the traditional system, that's why you put up the collateral, because you're going to lose. You're losing. You're going to want to pay it back. But in these circumstances, you just get the sense that even with NFT loans, to be honest, sometimes it's like, well, let me lock in this amount of ETH, and then if it goes down, I'm just like not interested in it. So yeah, interesting perspective. Legendary, do you have a final take there on what feels right? Like, is there kind of an written rule? Maybe we'll go to Sammy first, because I think he wants to come in.
Yeah, I think just comparing to traditional markets and being an ex-auditor, like a lot of these big companies would have disclosures around, and this goes back to T-Ray's point around transparency. You'd have related party transactions, you'd have directors' emoluments, you'd have directors' loans, like all these things. So anyone who is an accredited investor or anyone that's looking to get exposure to that particular company can go and have a full understanding of what the situation is. And I think the comparison I make to this is that there is less disclosure. It's not as regulated. And I think maybe as it becomes more mature, it's probably going to become more aligned so that we get to that point where people will be able to see his positions and make an informed decision as to whether they want to be exposed to the Curve token altogether. And then when they're aware of that overall risk environment, then they can make that informed decision. I think at the moment, the issue that I have is we don't necessarily have that disclosure or transparency, even though, like Sam says, it's on chain, but people don't necessarily check that, or it's not communicated in a way that's not ambiguous. And I think we'll get to that point eventually, but I just don't think we're quite there yet.
Yeah, it is one of the things though in this particular market, and maybe this is the final kind of thing where imagine that as part of the transparency, you need to, as a founder, communicate with all of the holders in some very, very transparent way that you're going to be doing this. Like, as a holder who's been in this ecosystem for a while now, that would make you sick, right? To yourself, like if you're holding that token and suddenly you realize there's going to be that much risk attached to it, like what would I do? And my honest answer is that I would get rid of the token. Like that's just how I would react to it based on my risk appetite, particularly for things which are not majors, right? Like Legendary, am I off there? Like, how would you respond differently if you had that kind of transparent kind of disclosure?
I'm very much in agreement with both Sammy and Stats in saying, yeah, of course you can say it's on chain, super complex to find out some things, and just having a disclaimer, having information on the website that's accessible for everyone who wants to use that would be way more helpful than telling people, hey, it's decentralized, find it out yourself. I mean, yes, it's true, but again, way too complex, especially if you do more and more things. And you also don't know like second and third order effects, right? You might be on a DeFi platform and do something completely else with a completely different token, but that token has a major pool with, say, Curve and is borrowing against that, and it has a cascading effect where, quote unquote, your token on the platform that you're trading with potentially could get fucked because there's this correlation with Curve, and you can't do all of that research on everything that you do feasibly yourself on chain.
Yeah, I think that's fair. I do feel for founders at the moment, actually, especially when they have these tokens that come out, and if the price doesn't come out the thing that they'd like, and they've kind of been building for a long period of time, it seems challenging to be like, well, how do we now exit if you have so many of the tokens, and on top of that, the price hasn't come out where you'd like it to go. So look, I think we've been on that topic for a reasonable amount of time. We definitely want to get to the Blast Gold stuff now. So Tiro, if you want to come in on that in a second, would love to bring you in. Let's do the Web3 roundup first, because we've got 15 minutes left. So we'll get you up to speed with everything else that's been happening in the space from the last 24 hours. And then we'll get into the Blast Gold predictions, pre-market prices, a lot of emotions swirling around. Let's get into it, starting with the Web3 roundup. Number one, Layer 3 raises $50 million Series A to build on-chain value distribution platform. Number two, Bitcoin Magazine asset manager called UTXO Management announced that they have made a $1 million investment in yield-bearing stablecoins on Runes. Very interested in that. Stablecoins on Bitcoin is very interesting to me, so I'm going to dive into that a bit more. Next, the Biden team are in discussions to accept crypto donations too, after Trump started, I think it was last week or the week before, Next, Moonbirds changed the art from pixel art to a more cartoon style. Actually looks pretty cool, in my opinion. Getting into a couple of other bits, X likes go private in move to prevent judgment for what users like. That is at least the intention stated from Twitter. I wonder if there'll be some knock-on consequences for that move. And finally, Bold Leonidas, a very prominent artist in the space, announces Boldinals, a 100 supply Bitcoin ordinal collection. The mint price will be 0.01 Bitcoin, but they have said that there's no influencer whitelist, or it'll be whitelist only, no public. I think it's all going to be sorted pretty quickly. So more details to come on that. Legendary, that's the rest of the news. We do want to get into Blast Gold now. Do you want to set up what we know about Blast Gold so far, and actually the final distribution that came out yesterday? So let's do the final gold distribution news, what came out yesterday, what your thoughts were on it, and the pre-market trading price for gold.
Yeah, absolutely. Final Blast Gold distribution went live. 10 million gold to be distributed. Looking at some of the top winners or some of the top receiving protocols, Thruster, Fantasy top, both over 1 million. Thruster with 1.5, Fantasy with 1.1 mil. Juice Finance moving also being in the platinum tier, not moving up. Sorry, 750k gold. As Sammy said earlier, Wolf Game received another 500k gold. YOLO in the same bracket with 500k gold. Cambria with 250,000 gold. And I think a massive, I'm trying to find it right here in the spreadsheet. Where is it? Blaster got a massive pump and now receiving 250k gold as well. I think before I want to get into the pre-market trading and my thoughts on that, we see a bit of frustration on the timeline right now with Pranksy basically saying best case he goes break even, or he's right that Blast TG is going to be a shitstorm following the YOLO TG yesterday. Easy, the post that you just had up as well in a video, commenting that he had wagered 2-digit ETH on YOLO and has not really received a great deal of an airdrop. I think a couple $100 or $100 or something like that.
I think 20
$20, whatever. And I think there's a couple of points to be made there. On YOLO itself, YOLO had great momentum when the token went live. However, there was a bug that prevented people from claiming the token, airdrop farmers from or gamblers, players, whatever, however you want to call them, from claiming the token for a while. Well, at the same time, it seems that some people have received tokens, and that assumption would be that those are either early investors or investors that came in the last minute round that YOLO did, since their LPP rucked and didn't work, and they did dump the market quite a fair bit. And again, because of that bug, the momentum that YOLO had at the launch was killed. And people were kind of disappointed in the token. However, and that would also my response be, and I'm going to connect it to the Blast pre-trading in a second, to Easy made the point that he did this double-digit ETH volume on a platform where it was very clear from the get-go that gold distribution is going to be linear to your wagered volume. And it was very clear that YOLO did over $1 billion in volume. So if you wanted to go hard on that, you had to go hard on the numbers as well. It turned out that the winning strategy on YOLO was playing Mono Doom, hedging your bets on that, and basically just paying in fees. It is what some of the bigger farmers did. It's also what I did, other than spinning the wheel. It's also what Stats did. Personally ended up with 4.2k gold out of yesterday's distribution and close to 8k gold from YOLO in total. But I do get the disappointment around the airdrop. They have introduced some cool mechanisms. Don't want to get into that because it's going to sidetrack us from the Blast Gold discussion. On the Blast Gold discussion and price itself, there is...
Legendary, should we just stop there for a sec? So there was a lot of information. Sorry. Let's stop there and we'll get into the actual price in just a moment. On the YOLO TGE, did you say that there was, like, the token went live, but it was sold into aggressively, like, before other people were even able to get their tokens?
Yeah, exactly. I think launched at 80 mil FTV, went down to 40-ish, and went back up to now at around 60 MFTV.
And do people know who those tokens went to or not?
What do you mean?
Who are the sellers?
As I said, probably some of the early investors or people who came in the late round and had an unlock at TG.
I mean, that's hard to take, right? I think for anyone, normal participants, to see that happen, whether it's a bug or not, like I think that's quite a challenge to see. Although, frankly, I mean, this is not defending it because that does seem like a very annoying thing. Sometimes it is the case that whether you are early or not, if you're late by half an hour, you're always going to be like down a certain percentage anyway. So that is a challenging thing. Let's continue this discussion here. Sam, I see you with your hand raised. What are your thoughts on the YOLO kind of rollout for their TG?
I think there are a few things. One, yes, what Legendary said, you know, the fact that they had to roll back their distribution, you know, that the token had gotten up to like 150 million FDV. Wow. And then they said, we're taking, you know, there's a bug and we have to roll it all back. And I think when you do that, like the vibes get destroyed, and this is like a vibe-based game, and you know that I think that was really harmful. So for someone like Tranksy, you know, who I think who just went big on the game, like yeah, it's just the token just ended up not being worth that much. I think the other thing was the day before, you know, they did a quick round where they raised a $40 million FDV, I believe, and you know, I think some of the people who bought in there sold right away. And so there were just a couple things they could have done, like, you know, make that round like 6 hours after holders get it. You know, there are a few things they probably could have done to favor the players as opposed to some of these people who provided last minute liquidity. I think the other thing, and when I look at someone like Easy, I think what happened there is what ended up happening was you did not get rewarded for wagering a lot of money on YOLO. You had to wager it, but you had to bet early in every single round. So if you came in with a bet in the last 5 seconds, you got 1/20th the number of points as someone who had a recurring bet on and immediately put their bet in. They always rewarded early liquidity. And to anyone who is doing a little bit of research, that was obvious. But I think a lot of people weren't doing that level of research. They did a lot of gambling. They'd bet on kind of Moon or Doom last minute. They would bet on Poke the Bear, which didn't get any points. They'd bet on the YOLO wheel last minute. And they'd put a lot of money in, and they'd say, hey, we were told to put a lot of money in. We put in a lot of money. We got nothing in return. Well, in reality, you had to go a couple layers deeper, understand their scoring system, and realize that you got 20x the points if you put your wager in the first 20 seconds versus in the last 20 seconds. So you were really wasting your money if your goal was points, if you didn't do it at the beginning. And I think a lot of people, especially the more casual people who aren't in the Discord like Legendary, who aren't the guys, you know, and that's why if you go to the game, you'll see someone like Tranksy had a permanent bet on. Because when you do permanent bets, it immediately registers it, so you get all the points. And I think there was a lot of that misunderstanding on the time.
One quick comment to add to that. That's absolutely very, very true, and agree, especially with the multiplier. Very important to point that out. And even for example, in Easy's case, even if he did everything with a 20x multiplier and he's, I don't know his exact volume, double-digit ETH, assume it was 30 ETH, that's a bit more than 100K. Like, I know 100K is a lot of money, but it's not deposited. It's wagered volume on a platform that does more than 1.5 billion USD. What is that? That's less than 0.1. Yeah, 1% would be 10 mil. It's 0.01%, less than 0.1% of the wagered volume. And in a linear distribution, like, you can't expect a lot. It's like you go through a thruster pool that has 100 million there, deposit 1K, and you're surprised why you don't get a lot of money on that. So it's definitely, it was definitely very, very, it was not good for casual players on there. It was more rewarding for the whales, but that's also the way how, in my opinion, you have to structure this linearly, because ultimately a gambling platform lives off its top gamblers losing their money there.
I'll just throw in one other thing, and I think that I see this a lot on the timeline as well, and it's exactly what Legendary just said. Like, people who will stake $2,000 and then get nothing in return. In February, that got you a lot because farms were under-farmed and tokens outperformed. You had Portal suddenly go to $2 billion, and everyone's like, what the fuck just happened? And those things were underfarmed. Now you have the opposite situation, which is exactly the definition of a cycle. Is something gets hot, so more people come in, and then there's more supply, and as a result, things do more poorly, so things go down. Now you have a ton of farmers, and in YOLO's case, a $10 million market cap. So like, there's just not enough money to go around anymore because the tokens aren't printing. You compare that with Portal, which was very underfarmed and had a $2 billion market cap. So it had something like 80x the market cap or 40x the market cap. Sorry, 40x the market cap, and far fewer people farming. Like, that's just the world we're in right now. There's just not enough money coming to market in these deals to compensate for the fact that you have so many people who are expecting big payouts, and putting down $1,000, $2,000, while it's a ton of money for most people doing it, just doesn't really survive in this game with the amount of size that bigger players are bringing to the table.
Absolutely. I think Legendary and Sam have just nailed it there. And the learnings from the YOLO experience can basically be extrapolated out to any of the other platforms as well at the moment. So like these tactical games where people think that if you put X number of volume down, for example, with Blast the Balloon Legendary, the segment that you did on Tuesday for like the game that we've been playing on Blast recently, like, as you say, it's got a similar mechanic. All of these games have like similar mechanics where if one of the things you want to do is optimize for the points, then there's like that 5x multiplier if you bet within the first maybe minute and a half or something like that.
Exactly.
Then it goes down to a 3x multiplier. Then it goes down to a 2x multiplier. Then the multiplier might not even be there. And just think, if all of your bets, if all of your volume gets done with the 5x multiplier, and someone else is always waiting towards the end trying to snipe the win, but they have no multiplier, then when they come to do their points, they're going to think that they've put all this volume through, when in reality, they might be quite far behind. So definitely learnings to take, not just from YOLO. So we're speaking about that specific gambling platform, but I think you can apply some of that learning across the board. We've only got a few minutes left, and we haven't actually touched on the pre-market price. So I've got this tweet here from Franklin, which reported that Blast Gold is finally tradable, very, very excitingly. Blast Gold is trading between $3 and $4. I think it's closer to $4 at the moment on pump.market, which is about half the price of the consensus estimate at the moment. That was Franklin's statement. Want to hear from you, Legendary, straight away. In fact, all of us here are deeply involved in Blast, so I want to go around the horn. Definitely want to end with Sam because of his previous gold estimates. Legendary first.
Yeah, absolutely. A couple of things on that. I have pump.markets open. I'm looking at the recent trade history, and all the recent trades since it's open in the last 17 hours have been between a very narrow range of $4.4 to, what's the highest one I can see, $4.73. Not a lot of gold has been traded.
How much volume?
Not a lot of gold has been traded. Highest ticket that was sold was 150 gold. So all in all, if I add this up, it's 100, 150, 400-ish gold have been traded between $4.3 and $4.7. And Sammy and I had a little chat before the show started. I tried to find a post or tweet confirming that, but we both have a very strong memory of Pac-Man saying, posting, whatever, that trading gold is something that is not to be done, and traded gold will be zeroed out, will be slashed. And I've seen that take by other people on the timeline as well. So I'm pretty confident that I'm not making this one up. And we see low volume, and we have a situation where it's unclear if that gold gets slashed, zeroed out. Is it the traded gold? Is it all of your gold that you then had farmed? So I am not surprised to see the Blast gold price a bit lower on that side of things.
So I've actually got the response from one of the guys who works at pump.markets here in response to that question, right? Because I think it's a very fair question to ask. They shared this response to people who were wondering. They said, appreciate you asking. As far as I know, both Blast points and Blast gold will be redeemable for token with different conversion ratios. The wording on the Blast docs is identical for points and gold, trading and liquid proxies. Therefore, points are okay, so gold should be okay as well. So they've applied some logic there. I don't think that's like a concrete confirmation, like rubber stamped that it's completely fine, but it seems like they've deduced from the way that trading points was okay, that gold should be fine as well. Sammy, what about you? What are your thoughts on the Blast trading volume? Do you think it might be a little bit suppressed because people are not sure about it? People in general are just, not keen on pre-markets. I think people have lost a bit of trust. What are your thoughts?
A couple of things. I think the recenteism bias around YOLO is probably playing on a lot of people's minds, and seeing that on the timeline, that's a lot of FUD. Actually, I'm quite happy they're doing that, because there's still another distribution. It means that things are going to be less farmed, so it gives us more opportunity. I do think that, even though there's not that much volume on pump markets, it's very hard to use that as an indicator. I think that $4.5. We've spoken about typical FDVs that it could come out at, benchmarking it. I'm still in my lane, moisturized, still accumulating Blast gold. Not concerned at all, to be honest. And actually, I think I reallocated my portfolio as well. So actually, I'm not that bad down on ETH terms. So if whatever it comes out at, it's just my time. I know people say that time is money, but what would I be doing with that otherwise? I've got into an ecosystem that I really enjoy. I've kind of done the game theory, and I thrive on that. So I think that ultimately it could come out at 4 or 5, and I think I'd probably be happy with that.
Wait, one more point on that, because Cyrus had a post also saying that before Blur TG went live, there was also massive FUD on the timeline saying points will be worthless, this all will go to 0, and it didn't. So it's interesting to see that we now have a bit of a similar sentiment getting closer to the Blast TGE.
Yeah, I think that's a fair point. And I would not want to be the person that fades Cyrus, to be perfectly honest. Got to go to stats here, though. Sam, what did you think about the pre-market price? Do you even attach much value to those at the moment? How are you thinking about gold being traded, and the final distribution, and what kind of price we might be seeing when it really gets to TGE?
I don't know. I there are a bunch of different kind of thoughts in here. When people talk about trading gold, I don't exactly know the mechanic. I think one of the things about these tweets I've put out about gold estimates is people misconstrue it as gold actually being a tradable asset where we're going to know a final number. We're not going to know a final number. People are going to get a certain amount of blast. It's going to be some combination of golden points. We're never going to know exactly what gold was worth precisely. It's just one of the pieces that's going to lead to your overall airdrop. So when people talk about it being tradable, I'm sure there's some mechanic they're doing behind the scenes, but I don't fully, I don't know enough about what it is, but I certainly don't put much weight in it. I think if you're going to start talking about $4 gold, there are 3 variables that go into what the gold contribution will be. One is the total supply of gold that's outstanding, and I think that's pretty non-negotiable at this point. I think maybe they'll give out a surprise allocation to projects or something at the end, or to found, I don't know. But in the absence of some surprise, which I wouldn't rule out, that's pretty clear what that is. The idea that they're going to give out 15% of gold to projects, I don't think that that's super controversial. They give 12% out to Blur. They said they're going to crank that up because they delayed. So, somewhere in the 13 to 15, 16% range feels pretty reasonable. So then the only other thing you can be adjusting down is the FDV, the valuation at launch, because it's total gold supply, percent given to farmers, and valuation. Those are the 3 factors that go into my gold estimates. If you're talking about $3 gold, you're saying that Blast is going to have a lower market cap than Blur. The numbers that people are actually people say things like gold to $1, but they don't know what they're talking about. That's literally just, there's a lot of people who just can't stand Blast, who can't stand Pac-Man, who can't stand me talking about it, which I get. It's annoying when people you follow change their topics. That's annoying, and I think people are sick of hearing about Blast. But when people say $2 gold, they're saying that Blast market cap is going to be half of what Blur is. It just makes no sense. So I don't put a lot of weight into a lot of the statements out there. I think they come from a place other than analytics that people are putting out.
Yeah, one more argument that I've seen that fits exactly that is also people saying, yeah, but what if nobody wants to be on Blast and buy Blast in the next 1, 2, or 3 months because there's nothing that you can do with the token? And that's also not a very valid argument from the point of looking at Arbitrum, Optimism, other L2s, looking at the Blur token even. It's not like those things are packed to the brim with utility. It's not like It's not the case that once Arbitrum did the TG or Optimism did the TG that people went away. And also, I am of the very strong belief that the incentives on Blast are simply not just going to stop with the airdrop.
I mean, I'd understand this argument if we haven't already been there twice. Like, this is Pac-Man's like third, fourth airdrop. We've seen what happens. Like, it's not like this thing's just going to disappear. And unlike when Blur token launched, there actually is precedent for the marketplace we are all a part of establishing value for governance tokens on L2s. Like, we have it with Optimism, we have it with Arbitrum, you have it with sort of Polygon. Like, it's like, you don't have to really like think that the world's going crazy to assume the market will ascribe some value to Blast. It's just very weird. The idea that he's just going to let it all disappear and everyone's going to run away before any of his investors get paid because he pays the holders first. Like, it just feels very out of touch with kind of what history has shown us about this human.
Yeah, I think your point on the people's objection to numbers without actually running the full maths on it. I think that's something people do where they just have their finger up in the air and it's like, $3 seems about right for this, or $1 might be appropriate. But when you
the only people saying 3 don't even own any, aren't even on Blast. It's just people who are out there being like, you all are idiots. It's worth nothing. Like, but they're not doing any analytics and don't even know what they're talking about.
Yeah, nice bit of psychological warfare there, just on the timeline for Blast participants. Look, one maybe point to note is that obviously we are very deep into the Blast ecosystem. Would love a final take from Bread. I know, Bread, you haven't really come across as much to the Blast side. Do you agree with much of what's been said? Would you have an additional take? What's your final point here? Let's put a bow on it because then we're going to wrap up.
Yeah, I was raising my hand just because since your DM stats, I want to cook on something because I've been doing some comparative actual usage analytics against the L2s.
Nice.
And they just see actual valuation increases. Like, that's the reason people actually launch these chains, is because it does typically come with a bump in valuation.
Sure.
And I think Blast, I tend to agree with stats on a lot of this stuff. I need to understand the tokenomics a little better to give an actual price estimation. But when it comes to actual usage of these chains, and if you are going to actually do it based on that, then I think Blast can sit comfortably in the middle of the pack and may surprise to the upside, but who knows in this market.
Fair point. Would love to know more as you do those deep dives, Bread. As always, really great deep dives and analysis coming from you. But look, we've run way over time today. Appreciate you for staying with us for that. Hope it was enjoyable. Thank you, as always, to my legendary co-host, Legendary, and Sammy. Thank you to our contributors, NFT Stats, Bread, Oxy, and Tiro up on stage. And thank you for joining us. As always, we will be back with you tomorrow for the final episode of the week, Monday to Friday, 7 a.m. Eastern Time, live on X, live on YouTube. Have a good one. If you're in London, we will see you later today for the Modern Market meetup, and have a good one. Take care. Bye-bye.